We welcome Cesar Passari, the CEO of RYU Apparel Inc. Welcome, Cesar.
Hi, it's actually Rob Blair. I'm the COO who works with Caesar. So I'm going to be
Okay,
hitting
Rob.
today, but I'll give a quick, I'll pull up my slides here and I'll give you a quick intro on me. There we go. All right, cool. Well, first of all, thanks everyone. Thanks for the time. Appreciate it. Quick intro on me. I was pulled into the company 90 days ago. My background, I've been in this space for 2 decades. In a quick overview, my past career has been involved with Lululemon, Nike, primarily athletic sportswear brands. I was the builder of the Lululemon business for men's, and the author of the franchise, the ABC Pant franchise, which currently runs, I think it delivers somewhere around $200 million to the bottom line every year. And the men's business is now tracking just under $1 billion. So great experience there, great learnings. And then I went off to work for the Gap and then work with Nike and building out the Nike Lab model, tip of the spear of the world's best storyteller. So been around the space a long time, met with Caesar, came in. And so what I'm going to give you here is a quick soundbite of where we're at as we're working through our refocus strategy. First and foremost, this is a really healthy industry. The athletic apparel space is considerably growing at double-digit growth, 200+ billion projections by 2025. I think one thing here notable, and we all see it during the pandemic time, people are training at home. You see what the numbers that Peloton's putting up every quarter right now. This is a healthy space, and it's not going away. I mean, health is the new currency of wealth, and it's becoming more prevalent across the board. So really excited about us and the position we have as we go into this space. One of the things to call out, though, when you look at the space of that 200 billion projection, 10 brands dominate roughly 30% of the space. So the likes of the Nike, the Under Armours, the Adis of the world, and then a number of challenger brands. The one piece to really note, though, is what's happening is you're getting this massive amount of undifferentiated product. And what that's doing, it's compromising the experience for consumers. And this is where we see tremendous opportunity in the white space. We're going to cut through the noise and create a differentiated product that really allows us to create space and grow our share of the market. Some of the trends that we're seeing as well, and this is, obviously we're all, astute of what's going on in the world during pandemic time, no surprise, e-commerce has now jumped to being a pretty dominant force within your overall, your sales mix. And, one thing here to note, in the first 3 months of 2000, we're seeing 10 years of combined growth. And that's not going away. Even after a pandemic time, there's a pent-up demand for retail, and we know retail is going to be really important. And obviously, our refocused retail strategy is really key to succeeding. But a critical part of that mix is still going to be e-commerce. And what does that look like from an experiential standpoint? Some of the stats right now show that about 18% of consumers feel like they get a decent experience online. That's a pretty big upside opportunity around your service model, purely beyond what you're presenting as far as a product offering. So we see this as, again, great opportunity. That leads us into one of our big focuses of our refocus strategy, which is creating this ecosystem, this digital ecosystem, and an integrated marketplace. So we create this seamless end-to-end experience on every touch point of the brand. Really what this allows us to do is speed to market with product, with storytelling, with a narrative. And I think in the last presentation, we heard it front and center, digital or in data, we allows us to kind of start to create this engagement with our community and our sub communities, and really developing a good insight into the data, which will ultimately allow us to feed into our ongoing strategy, geolocation of new retail pop-ups, product mixes, and so forth. We're really becoming more intelligent when we move through our seasonal plans. The 4 pillars of our digital ecosystem, commerce, our service model, you look at the utility here, and then ultimately, really what this is going to do is it's going to allow us to kind of create speed to market, really bringing in stronger, more compelling stories, leveraging partnerships that we've got in place right now. And I'll talk a little bit more about that in the coming slides. But ultimately what it's going to be is allows us to have more agility, be able to move quicker, and create this seamless end-to-end experience, which truly is what consumers are looking for. They're looking for experiential brands. They're looking for ease. A big part of our strategy is about making it easy for consumers, easy to understand, hyper-curated product offering, narrated stories that speak to our male and our female consumer, and also different parts of the market. As we solve as an athletic brand, I mean, I'm sure the question comes up, well, so what's different? We look at run, train, live as our pillars of our business. And we don't just solve for a one category, a CrossFit or a running category. We recognize that consumers are becoming athletic opportunistic, and also the blurring the lines between everyday leisure and clothing and athletics. So we look at this as, again, our opportunity to be disruptive, purposely disruptive, and create a unique expression of product that allows us to create solutions that allow you to kind of move through your day. Continue to focus on innovation, key partnerships for us, working with Noble Biomaterials, Silver, bringing in XT2, bringing in some unique technology in and around volcanic rock, curated product offerings, so very clear and concise. So consumers really, it's easy to engage with the brand. And then being narrow and deep on our product mix. So again, core products feel new at every delivery. So there's lots of depth and variety. And continue to inspire through storytelling. And I'll talk a little bit about the team. Big part of our focus here is really transitioning the brand from being a transactional brand to becoming a brand of belonging. And we know when we see the likes of Lululemon, they've been very successful at this. I was part of that playbook. I wrote that strategy. And we're taking chapters of that and also evolving it to where we are today.
Rob, you have 6 minutes.
I'm at 6 minutes?
For questions, yes.
Okay, so click right through growth path. Again, last slide here, and then we'll jump into some of the key partnerships. Our growth is being paralleled to what we're seeing in the market, and also what we know we can do. So conservative estimates, pretty strong CAGR growth based on real numbers, productivity, and then really the team that's going to be able to do it. So strong pedigree within brand building, business people from everywhere from Adidas to some of the leading agencies. So really excited about that. Key partnership, Zoom Media, BEI in the entertainment space, really allowing us to tap into the entertainment world and leverage these partnerships to really drive growth. And then some of like Canada Skateboard and supporting the Olympic team. So lots of demand creation opportunity, product mix, right team and talent. And we're on our way. And our ask is roughly $5 to $10 million based on the partner that we're looking for, which is going to allow us to kind of fund first phase, second phase of our growth plan. Questions?
What's the pre-money valuation?
Sorry, I missed that.
What's your valuation with the 5 to 10 you said?
Yeah, our valuation right now, I mean, we're tracking around, we were at around a $50 million valuation. We'd like to be sitting back there. That's where we see the valuation and where it should be right now. We'd like to see that move upwards of 75 to 100. And again, after we get through year 1, year 2, I feel confident that we'll certainly have the numbers to support that.
Sorry, so when did you go public? You're public in the TSX.
Yeah, no, so we've been public for some time. The exact date, I believe, is somewhere around 2013, I believe. And the brand's been around quite a while. It's had a different it's been going through a number of different spaces. And again, part of the refocus and part of the reason why I'm here is to reshape, refocus the business on a core consumer and an opportunity that has been it just hasn't been able to capitalize on. So we've been public for quite a while. It's had an interesting past. We've had some great success, and it's kind of up and down. Right now, what you're seeing is a soundbite to the refocused strategy and the core team, leadership team that's come in.
So how do you get, can you explain the $50 million valuation, right? And also, what is the revenue so far, the company?
So the revenue has fluctuated. We have, we were at 5.6 a couple years ago. The business tracked down last year, again, some missteps in the previous leadership in the company. This year, we're tracking around $1 million in revenue, so it's relatively low. But that said, our incremental growth, we're up 128% in e-commerce. Because of the COVID year, we've had our retail doors shut down, so we missed some great opportunity, and the business didn't pivot quick enough into e-commerce. Now the strategy is more balanced. We've got our retail doors open. We've opened up this click and collect opportunity, so to help with our service model. And we've got a refocused e-commerce strategy with some pretty strong players coming in on the retrend strategy.
And what was the revenue in 2018, 2019, pre-COVID?
Pre-COVID, we were, like I said, we were tracking upwards of $5 million pre-COVID, and then it trended down right as COVID hit. So obviously, all the businesses that were retail focused were hit pretty hard. RYU.
There was no e-commerce at the time. You started in e-commerce.
It was a smaller part of the focus. So e-commerce has been a relatively I'd say in the last 12 months, it's been a core focus of the business. And in part, it hasn't, we just haven't invested as much in e-commerce as we could have and should have. So we've now done that. We're capitalizing on it. We know the opportunity. We know where the future growth is coming from. And we feel confident that we're really positioned to win.
So what's your expectations, your projections for 2021?
2021, we're going to close off the year. Our projection is upwards of 5 million. And as we move through our growth plan into 2022, based on the newness and the increased frequency of deliverables of product, and then our new refocused brand strategy and our partnerships, we're looking at about a $10 million to $15 million 2022, closing off the year. And then when we start to see a bit of a growth spike, we're going to see it in 23 with our refocused retail strategy, where right now we have 3 core doors. In 2023, we're looking at changing the model, being a little bit more disruptive, using the data to help drive geolocated retail doors, smaller footprints, and product mixes that speak to the core consumer in that region. And again, a different fulfillment model, and then targeting $1,500 to $2,500 per square foot with more agility at retail. So, that's when we're really going to start to see a spike in our growth plan.